Welcome to your weekly crypto market update. We're here to provide you with a clear and concise overview of the most important developments in the cryptocurrency space. This week has been particularly interesting, with several key events suggesting a shift in market dynamics. This week, beneath the surface of price consolidation, something significant was brewing. While the price of Bitcoin has remained relatively stable, indicating a period of market equilibrium, the crypto market saw pivotal shifts, subtle yet impactful changes that could signal the beginning of a new trend. First, we observed a notable drop in Bitcoin mining difficulty, coupled with a major Ivy League endowment, specifically Brown University, entering Bitcoin through an ETF investment, and perhaps most notably, MicroStrategy doubling down on its BTC strategy, further solidifying its position as a leading corporate holder of Bitcoin. These developments signal deepening institutional interest, suggesting a growing acceptance of Bitcoin as a legitimate asset class. This is further supported by a maturing network infrastructure, capable of handling increased transaction volumes and institutional demands. We'll break down what the mining adjustment means for network health, exploring its implications for miners and the overall security of the Bitcoin blockchain. We'll also delve into why Brown University's ETF investment matters, examining the broader trend of institutional adoption and its potential impact on market prices. Finally, we'll analyze how MicroStrategy is reshaping corporate treasury norms, setting a precedent for other companies to consider Bitcoin as a strategic asset. Crypto is no longer just for retail investors. The landscape is evolving, with institutions playing an increasingly significant role. Institutions are quietly building positions and confidence, signaling a long-term commitment to the asset class. Understanding these foundational moves is more important than chasing short-term price swings, as they provide a glimpse into the future of cryptocurrency adoption. Let's dive into the key events shaping the first week of June 2025 and unpack the underlying forces at play. We'll explore what they mean for the road ahead, providing you with the insights you need to navigate the ever-changing crypto landscape. Here's what you need to know. Bitcoin's price action has been characterized by sideways movement this week, indicating a period of consolidation in the market. This period of indecision follows a period of high volatility. The price has been hovering near the $71,000 mark, acting as a key psychological level for traders and investors alike. This level is being closely watched. We did see a brief dip below the $70,000 threshold, testing the resolve of the bulls and causing some short-term concern in the market. Ultimately, Bitcoin recovered to close around $69,500, reflecting a modest 2% loss for the week. This slight dip underscores the current market uncertainty. The broader cryptocurrency market seems to be in a holding pattern, exhibiting a similar sense of cautiousness and consolidation. Investors are largely on the sidelines, carefully awaiting the next major catalyst that could potentially trigger a significant price movement in either direction. Ethereum, in contrast to Bitcoin's relatively stable performance, experienced a sharper pullback, indicating a shift in investor sentiment. The price of Ether dropped noticeably, falling from levels above $3,800 to around $3,650, reflecting a more pronounced correction. This decline can be partly attributed to the fact that the initial excitement surrounding the potential approval of spot Ether ETFs has cooled off somewhat. Across the altcoin market, we observed mixed results, with some coins showing positive momentum, while others faced downward pressure. A notable standout was Toncoin, which experienced a significant surge of 15% following its integration with the Telegram messaging platform. On the other hand, Solana and Cardano, two prominent altcoins, experienced declines of approximately 6 to 7%, indicating a shift in investor preferences. This divergence in performance highlights a growing trend, a flight to quality within the altcoin market, as investors seek safer and more established projects. Projects that demonstrate real momentum, strong fundamentals, and clear use cases are increasingly outperforming those lacking such attributes. Overall, investors appear to be holding steady, demonstrating a degree of resilience in the face of market fluctuations. They are choosing to wait patiently for the next significant market move, rather than engaging in panic selling or impulsive trading decisions. The key takeaway from this week's market activity is patience. The market seems to be in the process of building a new support base, establishing a foundation for potential future growth. In this environment, altcoin performance is increasingly dependent on the strength of their underlying fundamentals and the value they offer to users. So let's delve deeper and see what's happening behind the scenes, examining the key factors influencing these market trends. Bitcoin's mining difficulty dropped by 1.5% this week, giving miners some relief after April's halving. The adjustment reflects less efficient miners exiting as block rewards were cut in half, making operations unprofitable for some. For those who remain, lower difficulty means higher chances of earning rewards and improved profitability. This self-correcting mechanism keeps the network secure and efficient, even during economic stress. It's a natural culling that strengthens the mining sector and ensures decentralization. For investors, these adjustments show Bitcoin's resilience and adaptability. The protocol's ability to self-heal is a core strength, supporting its long-term value. Now let's turn to the latest in institutional adoption. Brown University made headlines by investing in a spot Bitcoin ETF, marking a major step for institutional adoption. The Ivy League endowment's allocation to BlackRock's iShares Bitcoin Trust is small in dollar terms but huge in symbolism. University endowments are conservative and long-term focused. This move signals growing acceptance of Bitcoin as a legitimate asset. Brown's decision could open the door for other endowments and pension funds to follow. Regulated ETFs have made it easier for institutions to gain exposure without technical hurdles. This is a pivotal moment for mainstream crypto acceptance. MicroStrategy, the publicly traded business intelligence firm, has once again made waves in the cryptocurrency world. They've doubled down on their Bitcoin strategy, buying nearly 12,000 more Bitcoin. This latest purchase cost them a staggering $786 million, further solidifying their position in the digital asset space. This significant investment brings their total holdings to an impressive figure, now exceeding over 226,000 BTC. Their commitment to Bitcoin is clear and unwavering. The company, not content with just holding Bitcoin, has boldly rebranded itself as MicroStrategy Bitcoin, or MBIT for short. This name change signals that they are all in on BTC, making it the very core of their business strategy and future direction. This latest Bitcoin acquisition was primarily funded by convertible notes, a testament to their innovative financial strategies. This aggressive accumulation of Bitcoin firmly cements MicroStrategy's status as the undisputed largest corporate Bitcoin holder in the world, a position they've worked hard to achieve and maintain. MicroStrategy isn't just passively holding Bitcoin, they are actively building Bitcoin-focused software solutions and contributing to the growth and development of the Bitcoin network itself. Their bold actions and unwavering commitment provide a potential blueprint for other companies and contribute to creating steady and consistent demand in the Bitcoin market, potentially stabilizing prices over the long term. While some financial analysts and commentators may call this strategy risky and speculative, MicroStrategy's unwavering conviction is undeniably shaping the narrative surrounding corporate Bitcoin adoption and influencing market sentiment. Their strategic moves send a strong and powerful message of long-term confidence in Bitcoin's future to the broader market. Out of all the news and developments in the cryptocurrency space, which story do you personally think will ultimately have the biggest impact on the future of Bitcoin and the wider financial world? We're eager to hear your thoughts and perspectives, so please let us know what you think in the comments section below.